I mean, when you see silver down 10% in a day when it's constrained, I'm just telling you, that is an opportunity. Well, we're seeing the market right now pull back. It had room to pull back. Everything has run really well. It's been strong. And, now we're seeing some of the hiccups and the volatility of a changing world order. And so I think one of the places that we should probably be paying attention to is even looking at silver right now. It's down 10% on the day. What happens typically in the midst of war is that people buy gold, they buy silver. Sovereigns have been doing this in very significant ways. ISO has ultimately made it available for banks to be owning this as a tier one asset. I think this is an incredible opportunity for those that are paying attention. And so, to your point, I think that this war is going to be settled out pretty quickly. Could we have conflicts in the Straits and with some of the transport of oil? Yes. Let's own oil. Let's be pro-U.S. Drill baby drill is going to happen here. And so I'd be focusing on U.S.-based stocks. I think that people should be also raising some cash right now, if I could just be honest. There could be some challenges ahead of us as the consumer's getting weaker right now. I mean, when we see Walmart and Target and everyone else selling more because everyone's pulling back a little bit on what they're spending, they're making better decisions. I think that there's room right now for things to go a little bit lower. And so the buying opportunities that I recognize are metal miners, our silver and gold specifically when we see big sell-offs today. One of the big things underlying...
I asked that to a prior guest about gold selling off today. It said 5,100 had been at 5,400. They said it's today a buying opportunity. You think so?
Oh, absolutely. Yeah. In fact, if you even look at the COMEX flows right now, since October, 50% of all COMEX assets have been drained out of the reserve. So we're literally within like a month or two of actually having zero silver in the futures markets to be able to leverage ounces against. This is an underlying fact that very few people are following right now. Nothing structurally has changed. This is an absolute gift and sale right now. And so I'm a buyer literally today.
What is happening with silver in particular? The dominant thesis this week is a forced unwind, creating a positioning imbalance that is about to resolve violently. Let me explain what's actually happening under the surface. When the U.S. and Israel hit Iran over the weekend and the Strait of Hormuz effectively shut down, the initial reaction was exactly what you would expect. Gold shot up to 54.20, silver ran to 96. Metals were moving like safe havens are actually supposed to act. Then something shifted. Oil kept surging, and the bond market, instead of rallying on safe haven demand, started selling off. That caused yields to jump. The 10-year went from 3.93 to over 4.1% in less than 48 hours. And that is not normal. In every previous geopolitical shock in recent memory, bonds rallied. This time, however, they did not. And the reason is straightforward. The market is looking at oil above $82 at the Strait of Hormuz closed, at ISM prices surging to 70.5, and it is pricing in something that changes everything. Higher inflation that forces the Fed to stay light or worse to actually hike. And that changes the math for silver specifically because silver is, as we recall, half investment metal and half industrial metal. When the market starts pricing a war-driven oil shock that feeds into higher energy costs, higher manufacturing costs, and a potential recession, the industrial side of silver gets hit hard. And that is why silver was down over 8% as I'm filming, but even earlier today, it was over 10%, while gold itself is actually down 5% as well.
It seems like a lot of people are concerned that there's not enough silver, right? And that there's so much volume being traded back and forth. What are you seeing?
Well, let's just deal with a few simple facts. First of all, COMEX continues to be drained of silver. Silver is leaving COMEX. It's also I think we're at the lowest level in years. It's also leaving the LBMA. It's about half the level about 4 years ago. And it's also leaving Shanghai, the silver exchange. So where's it going? Well, it's being consumed. And the reason it's being consumed is because the electronics industry is demanding more silver than it's ever demanded ever before. We've had a decade of rising silver demand, much of which is coming from the electronics industry. We've had a decade of falling silver mined production. 4 or 5 years ago, we went into a situation where we passed from surplus to deficit, and the deficit every year now is growing larger and looks like it will continue to grow larger. So the difference between mine supply, which is falling, and industrial consumption, which is rising, that negative gap is getting bigger and likely to continue getting bigger for as far out as the eye can see. So the difference has to be met from above ground stocks of silver. And yes, if you ignore the falling supplies on COMEX and LBMA and elsewhere, there's quite a lot of above ground silver, but there's nowhere near as much as there used to be. It's getting less. And as it gets less, you need to offer those who hold that silver an incentive to unload it. And the incentive is a higher price. So everybody has their price. And, the surge in price we saw from, let's say, below $50 to over $100 at one point at the end of January was one of those surges which made an awful lot of people think, that's higher than the price I would have sold at. I'm out of here. So a certain amount of silver came and met the demand, but the evidence is that silver is still which came out, is still being consumed because we're seeing the supplies at the various futures exchanges dropping. So that nothing has really changed relating to the fundamentals of silver, and I think that it's quite possible, and I'd say more likely than not, that silver will continue to see higher prices as the industrial users, who are relatively price insensitive, you can't stop producing cars just because the price of silver's gone from $50 to $150. I mean, it's what is it, $80? But you're not going to say, I'm going to wait, stop the production line while I wait for the silver price to come down. You're not going to do that. So the demand is relatively price insensitive. The supply is relatively insensitive to the price because most of the we've seen a higher silver price, but the mine production has still gone down. So what are we looking at? We're looking at silver, which is being mined as a byproduct mostly of other metals. The easy mining has mostly gone, which basically means that any increase in supply of silver is going to be from the mines is going to be very marginal, which means that deficit is going to continue growing. In my opinion, and growing deficit means that you've got to have a higher price to suck out the above ground silver.
Yeah, this is a market that has been moving up in a risk-on tone, as well as silver and some of the other metals, for a very long time. And you are seeing the dollar strengthen at a very aggressive rate. Dollar's up actually 1.1% today, and it continues to climb in an accelerated rate here. That's going to be a headwind when it comes to the gold trade. If you think about the fundamentals for the most part are probably still there, but you have a risk-off tone in the market, and there's been a lot of exposure to the gold trade for a lot of traders and investors, and they probably are trying to raise some capital. And once again, you're seeing kind of that sell-off taking place. A lot of the gold bid that we've seen over the last month and a half as well has been kind of anticipation of this. So this could also be kind of a buy the rumor, sell the news type of an event when it comes to gold. And for silver and some of the other industrial metals that are selling off a lot more aggressively than gold is, the concern is higher inflation and potentially economic slowing on a global scale, which could also dampen demand.